Hello, I'm Steven, the calculator guy, and today we're talking about everything. If you're wondering why I'm wearing a hat, it's because I cut my own hair and messed it all up. I miss it, it's gone, but it will grow back, and when it does, I will be hatless once again. So, what are we going to talk about? We're going to talk about Osmosis, which has been a consistently good farm forever. Since I got into DeFi, this has been honestly probably the best and most effective farm. Then we're going to talk about TOKE, which is on the same sort of level as Osmosis in terms of it's been a consistent, incredibly good play since the beginning of my DeFi journey. Then we're going to talk about Yearn, Platypus, 100 Finance. Those two are very similar. And then, just because everyone asks about it, we're going to look at the Aurora Chain briefly and some of the protocols there and, some of the opportunities. So let's get started with Osmosis. Okay, so basically Osmosis offers a bunch of pools that have between 50% and 150% APR, which cranks up quite a bit in APY. It can be 200, 300% APY. Now, the way that you interact with this is through a Kepler wallet. So the Kepler wallet you can download from the Kepler.app. Click Install Kepler on Chrome, click Add to Chrome, add extension, and you will get that extension. Now, my recommendation is sending Atom to the Kepler wallet as your guest. The Kepler wallet has a bunch of different chains that you can interact with. A lot of people I know like Secret, so if that's what you're looking for, you can do that. It looks as if the Crypto.org chain also works with Kepler, so that's neat. But I'll be using it with Atom because I believe that's where most of the onboarding comes from. So the cool thing about that is that you can use your Atom on Coinbase to send it right over to your Kepler wallet. Okay, so what am I going to do? I'm going to go over here to my extensions, which you guys can't see right now, and then I will pin the Kepler wallet. And so now you guys can see this K, right? So when I click on this K, you can see, I can sign in with Google, and actually I do have, let's see, will it still work? I don't even know what my account name was. New password? So it did work. I did have to do some authentication through my phone, but it worked. So here you can see my Cosmos wallet, and this is the address that you will send to. So you can go into Coinbase, you can send Atom to this wallet. You can also go through KuCoin or other depositories. I don't know how many Cosmos bridges there are. I imagine there are some bridges, but I have not used any. So, if you want Cosmos bridge, Kepler wallet, I'm sure there are some bridges, probably from Luna, but maybe there's not an easy bridge. So that's what I would use. I would use either KuCoin or Coinbase or whatever DEX you have and send Atom to that wallet. Once you have the Atom in that wallet, you can go over to Osmosis, and you're going to want to split your Atom into whatever pair you want. So the cool thing is they have this half button, which makes life super easy, especially for compounding. So presumably you could just click the half button and then swap. The gas is incredibly low here. And then you can go to pools, choose the pool with the assets that you'd like. Let's say Atom Osmo. It's a really nice OG pool, but there are really, there's lots of other big ones. There's Luna too, a lot of good Luna opportunities. Click Add Remove Liquidity, and then you would max. Now remember, if you have even 1 penny more of Atom than you do in Osmo, then you will not be able to max your Atom, you'll only be able to max your Osmo. Whichever one has the lowest amount, that's the only one you can max. So click Max, you'll add liquidity, and then you'll click Start Earning here, and you'll choose your unbonding period. So the unbonding period is basically how long it will take you to get your assets back when you're ready to exit your position. This has nothing to do with your ability to compound and nothing to do with your daily rewards. So if you choose 14 days unbonding, you're committing to a 2-week unbonding period, then you get the maximum APR. Now, once you start unbonding, your APR will dwindle down to the daily APR over time. So in those last 14 days, you will not receive the full unbonding rewards, unfortunately. So you can see where you would have to unbond. So every day you'll get your Osmo rewards, and what you can do is with those Osmo rewards, let's say you were in this pool, you'd put Osmo on top, you'd click half, and then you could sell for Atom, go back, add more liquidity, and then start earning again, and that's how you compound. And I'll leave a informational sheet down below. This was one of my earliest videos where I actually created an instructional sheet on how to do this, but it's really cool. So this is actually a great Platform, honestly, I should have stayed in. It's like a high conviction platform for me. It's done incredibly well, so it's pretty solid. I know a lot of farms are popping up and popping out and rugging and this and that, especially on all these EVMs, but Osmosis has really been solid. So if you just look for Luna, you can see the Luna opportunities here. Luna UST for 69%, Luna Osmo 93%, Luna Atom 28%. So UST Osmo. There are a lot of different opportunities here with some tokens that you may like. Okay, let's move on to Tokamak. I think it's Tokamak. So in Tokamak, effectively, if you don't know, it's hard to describe, but Tokamak is like liquidity as a service or liquidity rental as a service. So what they allow you to do is to provide single-site assets like Ethereum, USDC, Frax, LUSD, and all these other UST, and you get a yield on that, which is really nice, right? 7%. I mean, they're not amazing yields, but if you use that liquidity to vote, right, then you can get additional APR, right? 42% in this case. And additionally, there are some really good pools here. So I know from my own experience with Tokamak that the APR on the Uniswap pool has stayed above 100% for a very long time. It was 300% when I entered it like 5 months ago, 6 months ago, and it's still 166% APR. It's incredible, and this is with the token price increasing. So a lot of protocols are really interested in this. I do have a video on how to enter and exit TOKE, but of course, you know, with a much worse microphone and video. So I'll show you really quickly. You would buy Tokamak on like barn.coswap, which is my favorite. This is an Ethereum protocol. I do believe they're going to go cross-chain, but for right now, from my understanding, they're Ethereum protocol. So you would buy Tokamak, you would buy Ethereum at a 50% rate, and then you'd go to deposit Uni LP. Oh, sorry. You'd click this little thing right here, and it's just liquidity pool. So if you've done liquidity pool before, this will make sense to you. You'll max whichever one it is, right? So you have half of Ethereum assets, half of Tokamak assets, and you'll enter. And what that will do is it'll provide liquidity, and it'll pop you out a nice liquidity pool token. And then you'll click deposit, and you'll deposit that token here. And then every week you will be allowed to claim. Oh look, I have half a toke to claim. You'll be able to claim your rewards. So I'll show you. Like you click claim toke, and then of course I'm not going to pay gas for $25 because it's more in gas than I would pay. But that's what you would do, and yeah, you can manage all these too. And then you could compound if you wanted to. Remember, compounding is much more expensive on the Ethereum blockchain, so consider either having like a high commitment initial investment or waiting much longer. Maybe you want to wait 3 weeks or 4 weeks before you compound instead. And you can use my APR to APY calculator. I'll try to link that down below as well to sort of determine what works best for you. It does have a little space for you to put what your assumed gas price or compounding cost will be, so you can see what maximizes your APY. All right, so that's Tokamak. It's a phenomenal protocol. You can see there's 1.6 billion, which is, yeah, I remember getting it before it was 100 million. Man, really good protocol. I gotta be less ADHD with my investments. I should have stayed in this for much longer. But, I did make a good profit off of it. Anyways, I'm probably gonna re-enter. So Osmosis, Tokamak. To exit your position, you'll need to withdraw the LP, max withdraw. And then once you withdraw, you'll go back to Uniswap interface, you'll click pool, and what you'll see is your pool right here, and you'll click on it, and then you'll click manage, and you'll just click withdraw. And when you withdraw, what will happen is you will receive those tokens that you put in. So you'll receive your Ethereum, and you'll receive your TOKE. Okay, and a lot of gas fees, so keep that in mind. If it's a large investment, not a big deal, but if it's a small investment, it is a big deal. All right, let's look at Yearn. Yearn has a bunch of opportunities all over the place, and it's super easy to invest in. We're looking at Ethereum right now. So with Ethereum, we're going to go with vaults. Now, some of these strategies are harder than other ones. So I guess I say easy. It's easy to look at, but it's not necessarily easy to participate in. So here we have like these ones have been consistently above 30% for the past week, 2 weeks. So that's been really impressive considering they're stable coins. There is a lot of gas fees that you have to go through in order to get to this point of being able to deposit here and get that yield. So let me just sort of show you how this works, right? So this is IB British pound. And what you need, so here it tells you what it does. It supplies this liquidity pool token, IBGBP and SGPF, to Convex, and then so this platform will compound Curve and Convex tokens back into the strategy, which is how you get that really nice yield, that nice APY. So this uses Curve, so if we want to do this, we need to deposit the Curve LGBP. We have to deposit this token, right? So how do we get that? Well, we have to provide it on Curve. So we go to Curve and we find it, right? So it's not going to be super easy to find, but we click all pools, and you can search by IB, Control F, IB. We'll see, there it is, right? Okay, so you can see it here, and this is where you would swap. And if you wanted to deposit to get those tokens that we need, you'd have to go here. Now, you could deposit just one side, and that's sort of what I recommend for now, because IBGBP is, in my opinion, easier to get. So to get this IBGBP, just go over to fixed4x, fixed4x.fi/swap. And then, from my understanding, you can only use MIM, which is mind-blowing. And then find Iron Bank GBP. And there you go. Of course, you have to approve and then swap the amount that you'd like. But then you'll have your IBGBP. You can come over here. You can deposit and stake it in the gauge. And then once you've done that, you can take your receipt token and deposit it here. Now, I would like to show you guys how the minting works, but I can't because it's not working today. So we're going to leave this to be explained in the future. All right, let's move on. So Platypus and 100 Finance both seem to be having problems. Let's look at 100 Finance first. So 100 Finance works pretty simply. It does not work very well on Ethereum, just because gas fees make it sort of unfeasible. So it's too bad it's not on Avalanche. We could look at both of them at the same time. But effectively what you do with 100 Finance is you provide some HND tokens to get a better yield on your supplied assets. And if you borrow against those assets, that yield goes away. So here we go. Let's look at the Phantom Chain, for example. The Phantom Chain of the Opera. Where is it? There it is. Okay, so what you'll see here is a range of APRs and APYs. So here you'll see 12 to 52% for Frax, and then 17 to 44%. What that means is you will start off at the low end if you do not provide any HND token, and you can get up to the top end if you do provide HND token. So what I found is generally it's between like 1 and 3% of your initial in HND token is what's required, and you can figure that out pretty easily. So here's how it works, right? I'm gonna get this really quickly because I don't want this video to take forever, but basically what you'll do is you'll supply your asset, you click max, you supply your asset. Once your asset's supplied, you'll get an H token, so you get H Frax. And you'll come over here and you'll stake that H Frax by clicking approve, 100% and then approve. And once it's staked, then you'll be getting a yield on that. Now the yield you'll be getting after it's staked is 20%, right? If you just supply, you'll only be getting 0.95%. If you supply it and stake it, then you'll be getting that 20% immediately, and you can crank it up to 51% by providing HND. So we need to know where we can provide HND. First, let's talk about withdrawing. If you want to exit the strategy, just go to withdrawal, but you can't withdraw until you unstake. So first, unstake, then withdraw, and you're done. You're out. The strategy's over. So let's talk about cranking up that nice APR to 51%, because APY on 51% is like 70%, right? And 70% APY is really nice on stablecoins. So it beats Anchor, and that's what I care about. So we're going to click on Phantom, and I'm just going to show you. So effectively what you do here is you stake your HND, and then you can vote on the pool that you're in, and that's what I recommend doing, your gauge voting. So, oh my goodness, I'm having so many technical issues today. Okay, so we'll go back to Phantom. So this is where you would stake it, right? For the longer you stake it, the less you have to spend on H&D to get the larger boost. So let's talk about the fracs we're just looking at. Let's say we did $10,000, right? And the locked H&D amount. Let's see how much we need for the maximum boost, right? If we start at 50, the estimated APR is not much. So it looks like we need quite a bit. That's surprising. 10,000 fracs. So, that is surprising. Let's see if all the gauges are like that. Let's see the MIM gauge. Okay. Yeah. So I'm surprised, but I mean not too surprised. So effectively, it looks like we're let's see, 43%. I think, will it tell us down here? No. Let's see, 180, 44%, so we're getting really close. 190, 40, okay, so 180 will do it. Will 170 do it? Yep. 160, 150. Okay, so we'll call that 155. So 155, that is, what was that, 1.55% of $10,000? No, sorry, because we're at 500. So what percent of 10,000 is 500? Well, I'll just do quick math there. 500 divided by 10,000. That is 5%. So that's actually pretty hefty. It's you have to put down 5% to get a 50% yield. So a tenth of your year is going to be going back to repaying that. It's interesting. That's you can see if that's worth it for you in your own risk tolerance. But you will be getting a much higher APR. So then we can look at what Platypus is offering, which is in a similar vein, very similar vein, but with much higher APRs and APYs and much newer. So it's also a little bit more confusing. I will admit I am in 100 Finance. I got my H&D relatively cheap. I didn't have to pay 5% to get my maxed APR. So take it for what it's worth, right? I got a better entry than you would get now, so I can't advocate for the same thing that I got. All right, so here the PTP is the equivalent of HND, right? You'll be staking that and you'll be getting the VE. Back to 100 Finance really quickly. When you're on it, you have to vote as well with your VE, but that should be intuitive once you're there. Okay, so you need your PTP, right? You can get that on Trader Joe, and you need to deposit your asset. So whatever your asset is, right? You can see there's a lot of deposit here really soon. And you can also see, what's the coverage ratio? Well, it's the asset to liability ratio of the pool. Okay, so then base APR, we have anything between 10% and 14%. And then we have, I believe they have the average APR somewhere. Yeah, average boosted APR, 160% to 221%. This is really good, right? And to get that boost, it's actually remarkably easy. So maybe I'll put some portion of my assets in Platypus instead of having most of my assets in 100. But, I'm getting a pretty good yield on 100 as it is. So, and these are not as long-term plays, I imagine, as like TOKE and Osmosis, which are higher conviction for me personally. But perhaps they could sustain. I mean, these are kind of relying on Ponzi-nomics, in my opinion. Like, they're relying on people going out and buying the Platypus token, buying the HND token, and then locking it up for a very long time. In this case, 10 months, but in HND's case, 4 years, which is, decades and decades and decades in DeFi. So do keep that in mind, right? I would assume all the tokens that you purchase and lock are lost. Just imagine that. It's kind of like when you give out a loan to a friend. Just imagine you're never getting that back, and make peace with that. And if you do get it back, hey, it's a great gift. So you deposit the same way you would imagine. Just click max, deposit. You might have to approve first. And then to get the boost, you would have to stake, right? You'd want to stake your assets there. So here you can see another way of staking, right? You can stake your PTP to get VE PTP, and then you take your VE PTP, I believe, to the pool over here, and then stake. So it says the exact boosted APR you're currently earning at. The value depends on your VE PTP balance and staked USDTE. Okay, so sorry. Let me rewind. This is just like 100 Finance. You will deposit your assets first, and then you will stake your assets, at least I believe. Do I have any of these assets available right now? Do I have USDC on Avalanche? Yes, I do. Okay, so fantastic. We're going to go ahead and do this just so we can see the full strategy. $85. That's from one of my strong tax calculators, so thank you, whomever sent me some assets on Avalanche, for that, making this nice. Kombucha. So I imagine what's going to happen is I will have to stake my USDC after I deposit it, very similar to 100. Should I speed that up? I could do what FTM Alerts does and then go to the, look on the block explorer. It doesn't really help though, to just stare at it going through. Let's see, speed it up. 50 and 170. Max speed cannot be lower than max priority fee. Oh, I see. Right, so there. Is it not done yet? Save. I sped it up. Hopefully that'll help. Let me just pause and I'll reconvene. We can reconvene once the transaction goes through. Of course, it went through right after I said that. So, okay. So I have approved it. Now I should be able to deposit. Deposit? Yep, I can. Great. So same thing, we'll have a confirmation that I have to go through. So that was kind of weird. It said transaction failed, and then it said transaction submitted. So I believe it was successful, even though it said it failed. I'm going to go ahead and refresh. Like I would say, refresh is the magical button of DeFi. It looks like it did fail and didn't go through, which is unfortunate. But it must have, because I have 0 USDC. Okay, yeah, cool. So see how I have the stake option now? Wonderful. So I would go ahead and stake all. Oh my gosh. Really? Another approval fee? Yeah, so you get the point, right? I'll approve, and then I will stake. And then after that, in order to get the heightened APY on my assets, I will have to go to, I'll just go over it now. Go over here, stake, and then stake your PTP. Now, if you want to know how much PTP you'll have to stake, you want to click on this calculator. And so in the case of the USDC, right, I have 85. It tells me, it pops it up, it populates it. That's pretty nice. And then, so in terms of PTP that you'll have to purchase on Trader Joe, you can say 10 months. I think that's, again, I imagine whatever I'm buying, the tokens are gone. So I think one token right now is like $10. So for an eighth of what I'm doing, I'm getting an estimated boosted APR of 400%. Now this is estimated, it might be a little bit different, but that's really good. Like that's a really good place to be. So I think I might participate in Platypus a little bit with some of my stables. Now, granted, I believe the Platypus coin's having a bit of a time right now. PTP. No, it's still doing pretty good. It's not doing terrible. I think I had a big run up and then it started to go down again. But no big deal, right? It's a new token. Again, I'm not looking to hold this token for a long time. I'm just assuming that I'm burning that cost to get the high APR and APY. So that's my perspective. You can try flipping it if you want, but that's not what I'll be doing. Okay, cool. So we've talked about Osmosis, TOKE, Yearn, Kind of Curve, Platypus, 100. Now we can, at the end of this video, let's talk about the Aurora Chain that everyone is going so nuts over. I will say I made a little dip my toes into which chain was it? Metis, which is a neat L2, and got totally wrecked on a tomb fork. Glad I didn't tell any of my public spheres about that, because I did it embarrassingly bad. I did all my math was wrong. It's really actually I didn't do the math before I invested. Totally my fault. But yeah, lesson learned. So, left a bad taste in my mouth, but I don't blame that on Metis and the Metis chain. I do believe that Metis will also have like $100 million incentive program, so some nice PVE over there. So anyways, you can see that I feel like a few protocols have been added so far. Imperium DAO is a DAO, but we all know DAOs are not doing very well right now, so I wouldn't jump into that. Okay, so Tri-Solaris, this is where you would do your swapping and your LPing if you wanted to. great 7-day change. Wallet swap as well. Now, the place that you guys are probably interested in is the, oh, which one is it? They have an aggregator, Vaporware. So Vaporwave is their yield aggregator. So if you know me, you know that I like yield aggregators. I know they're additional contract risks, but this is a clone of Beefy. And so take that for what it's worth. You can aggregate your yields here after you buy your tokens. So you can see there's some pretty decent yields, right? And you have to look at these tokens and see what you're willing to expose yourself to. A lot of these are totally new tokens on a totally new chain. So presumably some of these may go up as the $100 million investments pour into this chain. Again, there's the Menace investments and these investments are totally different in nature. So both of these chains should be seeing investments, and so farmers will be moving to these to provide liquidity and hopefully make some of those gains. That's really all I'm going to say about Aurora and Near. If you don't know, Near is what Aurora is L2'd on. So that's pretty much it. Let's really quickly, let's talk about Cosmo, right? How great has Cosmo been doing? How great has Adam been doing? But let's look at the state of Ohm. Yeah, that's not good. A lot of people continuously ask me, about Ohm, and they ask me about time, and I've been telling them for the past, since November, that I wasn't investing in Ohm and I wasn't investing in time because, very simple indicator. To me, my stupid monkey brain says if the green line's under the purple line, it's not in an uptrend, so I'm not going to buy it because it's probably going to keep going down. And sure enough, you have one scam wick, but sure enough, it just kept going down. So anyways, that's my take on things, and usually I use the parental coin or the parental protocol. So in this case, like Ohm and Time are the parental protocols of all of the forks, and Tomb is the parental protocol of all of their forks, and there are forks of other protocols as well. But I use Olympus as a gauge of how Ohm forks are doing, and so not very well. So I'm not advocating for any DAOs at all. I haven't been for over a month now, with the exception of the one Christmas video that I did that I still regret doing. I did donate a bunch of money to charities, but will not be doing that again. In the future, it will be all my own money and not money from a protocol. So, okay, that's pretty much it, guys. Please, look at a chart before aping in. When people tell you to buy the dip, one, they're telling you that so that you can increase the price because they bought not the dip, and they want you to help them bring the price back up so they can use you as exit liquidity. Buying the dip is not really a good strategy because, as you can see, right, this was a dip, this was a dip, this was a dip, this was a dip, and no one can predict. Some skilled TA can predict when a good place to sell is. But if you bought the dip and you were just holding, you're not doing great right now. You're probably having a bad time. So keep that in mind. Instead of buying the dip, try to look for some sort of indicators that you're looking at a trend reversal. Like we just looked at Atom, right? Cosmos. They had a great indicator for trend reversal right here. So see right there, there's an indicator for a trend reversal. The AEMA 21 cross, and what happened, right? What happened after that trend reversal? Now, granted, you missed this tiny bit of yield right here, but that's okay, right? We don't mind missing that tiny bit of yield, because let's say we wanted to catch that yield here, but we got wrecked because we didn't wait for the full trend reversal. So that's all I'm saying, guys. Play it smart. I know this was literally my longest video, but I did have to give a shout out to two incredible plays that I wish I would have stayed in personally, which is TOKE and Osmosis. I do believe a lot of people are going to be talking about these in the next coming weeks. There's already, the rumor mill is already starting up again, and it's really cool to see Osmosis and TOKE get some limelight again. I do think that Yearn has some incredible plays, but it's just you have to know where to get those tokens, which can be a pain in the butt. Yearn on Phantom as well has some great plays. Vaults are supported on okay, so here we go, right? You can do stablecoin vaults for 20%. It beats it beats Anchor, so I like it. And you can, on some protocols like Creditum, you can actually deposit these and borrow against it for additional yield. There's some cool strategies over there, but I can never get the CUSD, so I'm not going to go into those strategies. I do believe FTM Alerts has done a video on that. Okay, guys, that is it. Actually, it's not it. There's one more thing I want to show you guys, and that is the Discord. So the Discord is finally linked to the Patreon, which means that there is the ability to pay to enter the premium part of the Discord is coming soon, but if you are a member of the Patreon who pays $25 or more, then you will have access to the premium portion of the Discord. So let's go to the Calx Discord, link of course in the description. Okay, so most of the Discord's already free. You can look at all of these things. All of these channels in the dojo are for anyone. If you go to the Inner Sanctum, which will only be available to paid members, you can see we have the Black Belt chat. Now the Black Belt chat is for like our more advanced users, or our most advanced users who have sort of shown themselves to be incredibly advanced DeFi users, or power users. So we let them sort of chat uninterrupted by anyone else except for mods. So this is for people to view. If you're a paid member, you can watch this conversation happen and probably get a lot of benefit from just watching the conversations. Whereas the Inner Sanctum chat is the chat available to all paid members, where they can just sort of talk about what's going on, and discuss with each other. And then all the calculators are here. So this is all the paid calculators are there, every single one of them, and then support. So the support channel is for any member who wants DeFi help and DeFi assistance, and the mods and I will respond there. So we're going to build out a ticket system. This is very early. We're expanding the paid section at the rate we get new users. So we want to keep it nice and nuclear now, and then expand it as it grows. So currently the only way to get access to this and access to the power users and the mod team is to join the Patreon at a $25 or higher level, and that $25 does not go just to me, that goes to paying my team. We'll also be providing newsletters in the future. We will be providing specific videos that'll be accessible to the patrons and the Discord, where we go over like sort of that week's news and that week's investment opportunities, not just compiled by me this time, but compiled by my entire team. So I'm looking forward to that. It's exciting stuff. But I guess one last thing. So if you guys have watched this far, right, the Strong Calculator Pro is giving me the most headache out of anything that I've ever made. And the reason for that is because the depreciating models for these things, like for compounding nodes, right? Depreciating compounding is nearly impossible to mathematically model on a spreadsheet. And so I've tried doing it with large data sets, and I've tried doing it mathematically, and I'm still coming up short. So currently the only things that are working are like this. So this big chunk works for all different node types. And you can even get like deprecated income. So you can see what your reward rates will be over time if you sort of don't compound any nodes from here on out. The thing that's not working is this with decay. This works without decay, but it doesn't work with decay. And so that's what I'm still working on. That's why it's still taking me a long time to get this out. I know, guys, it's taking me forever, but I am working on it. It's just very difficult to suss out. All right. Thank you guys so much for watching, bearing with me on all this. If any of you made it past like the 10-minute mark, congratulations, and have a wonderful rest of your day.